So you're hearing conflicting information and you're not sure what decision to make. Today we're going to talk about that. First, I'm going to give you the Greater Portland market update, and then we're going to delve into how to look at different kinds of information and hopefully make the best decision for you. Uh, First off, we have the Greater Portland market update. So days on market dropped down to 18 days on market. The list to sale ratio still at 100%. The sold price dropped to $519,000 in Greater Portland area. Mortgage rates climbed up a little bit to 6.11, and we'll talk a little bit more about that later. Inflation, we got the core inflation numbers. They were flat month over month. So now we're going to move into our topic, which is how do we hear conflicting information and make a decision? And we're going to first talk about lagging data versus the market of the moment data. So lagging data. We got the core inflation numbers, and inflation was flat. We also have been getting job numbers where the job market is weak. Both of those things together tell us that probably interest rates should go down. That lagging data is saying you have a softening economy and interest rates should be dropped by the Fed and mortgage interest rates should continue to go down. That's what the lagging data says. So why don't I think that's going to happen? So that has to do with more of market of the moment data. This market of the moment data specifically is the war in Iran. It has to do with some stuff we talked about last week, which is that in Iran, you've got the Strait, oil going through the Strait shut down, the price of oil is going up. So the price of oil makes products and services more expensive. Eventually, the inflation numbers go up. And when inflation goes up, bond returns go down. And when that happens, the bonds are not as favorable. The mortgage rates usually go up, right? So all of the market of the moment stuff is saying we're probably going to have an inflation issue and the rates are probably going to climb. The historical data is telling us rates should drop. So what do we do? Well, whenever you're looking at data, my advice is the historical data, as far as the information you know, still true? Because it's lagging, sometimes 1, 2, 3, 4 months lagging. This data, in my opinion, is no longer accurate. There's enough new information to say when these new numbers come out, they're not going to be the same, right? So the first one is the historical data or the lagging data still accurate? I don't think so. Then the other question I ask myself about conflicting information is this information pertinent to my situation? Example would be, real estate in Florida and Texas, prices are tanking, right? Is that pertinent to me in Maine? And as a seller, should I make my decision based on that? The answer would be no. Because Florida is dropping does not mean Maine is dropping. Maine has not dropped, right? So is the historical lagging data still true? And is the new information pertinent to me? In this case, the historical data probably still not accurate, and the new information is pertinent to everybody in the United States because inflation from the war is potentially going to affect all of us, and that mortgage rate is a national effect, right? So it could affect buyer ability to purchase. It could affect seller audience. So we get down here to what should you do as a buyer or a seller, right? So war in Iran happens, oil prices go up. Oil prices mean inflation goes up, the bonds weaken, and the mortgage rates potentially go up. So as a buyer or seller, what do? Well, as a buyer, that means your affordability potentially goes down. That means your purchasing power potentially goes down. And in general, people are not super eager to make big decisions when they're worried about important things like war. So the buyer market might shrink. As a seller, that means your demand might go down. There might be less competition on your home, and overall, the price you might get might go down. So my advice to you is based on the current information we have, which was we're practically at a 4-year low for interest rates, and we haven't yet seen the lagging historical data impact those rates as much as they may. So my advice is, if you're a buyer, don't wait for the rates to turn around. They might stay the same, but they might go up. Do something now. If you're a seller, list now, because these things are going to show up in the lagging data, and when they fully do, the rates are likely to go up. So use the best information you have, figure out if it's pertinent to you, and make the decision for you as quickly as you can. I hope that was helpful. Have a great week. If you want these slides, reach out. Talk to you soon.